Welcome back to Market Day Report. I'm Chris Swift. We've got the markets rip, snorting, and roaring this morning, and we are coming up on the top of the noon hour. Corn has been trading a little bit softer this morning. Let's see what it's doing now. Even softer, unfortunately. December down 3, 472, right on the low of the day. March down 2.5 at 487.25. Out to July down 2 at 504 even. In our soybean market, it had been holding its gains this morning and still is, but kind of giving back some. We're up 5.5 in the November beans, 12.96 3/4. Jan up 6.5, 13.21.5. All the way out to May up 6 1/4, 13.48 3/4. Our wheat market in Chicago still a little firmer, up 3 on the December, 5.64 3/4. March up 2.5, 5.92 even. Out to new crop July, 6.25 1/4, up 1 3/4. Hard red winter wheat out of Kansas City up 4 1/4 in the December, 6.44 1/4. May up 5 at 6.63. July new crop 6.69 3/4, up a nickel. And we'll wrap it up with spring wheat, Minneapolis, and it's up 1.5 on the December, 7.10.5. March up 2, up 7.30.5, and July up 2 1/4, 7.55.5. I'd like to invite my guest Tommy Grisafi on this morning. Tommy is with Advanced Trading, and Tommy, we saw a good boost this morning in the grain markets and softening a little bit. Surely we're going to have more than just this.
Well, Chris, I've been having to explain to clients, and I'm sure you have also, that volatility is contracting, and we may see bursts of busyness, but the markets that are experiencing the volatility today are the stock market. The stock market, the Dow Jones being up 400, and the VIX, which is a measurement of volatility, is at 3-week lows today. That is how nervous people are about outside markets. So VIX at 3-week lows, Dow Jones up 400. The Fed kind of said a word that might make people think that they're not going to raise anymore and they may lower interest rates. With that, corn's a big nothing burger, and corn is starting to, I hate to say this, maybe you would agree or disagree, that we're starting to break down to the downside, that we're breaking into that lower channel, and wheat's not acting well. Of all the markets, soybeans are acting the best. We have the least amount of them. The American farmer has staying power to hold those beans. The new crushing plants would love to have you store those beans and use them 6 months from now, but they're going to have to pay you extra to do that. But when you talk to folks, what do you tell them about corn, Chris?
Honestly, we're telling them to market their corn. They should have really already had it marketed, but we don't see a lot of aspect for a really higher trade. I know South America's got a little bit lower crop, but not really seeing much there. We've really been anxious for the bean market, and simply because we foresee some marketing opportunities out there where we might catch a spike high or something that gives us an opportunity to lay some of this risk off. But corn market does look a little bit soft out there, and it broke that 5-6 day little low that it had around 490, 492 in the D, so I think it makes it a little bit softer. But let me get back to you real quick on the unemployment report tomorrow. So will that kind of boost us a little bit? Do you think it's going to be a little bit higher, a little bit lower? I know the Fed's going to be looking right at it.
Sure. Now, we had a good unemployment number a month ago, and some people think that number was a little too hot. I will watch the number come out at 7:30. I will watch the U.S. dollar. I'll watch gold, and I'll watch the 30-year, the 10-year, and the 5-year. Then, of course, how the stock market correlates to that. We all know everyone who owns a business, and there's still a lot of help wanted signs out there. I guess the big argument or discussion is it help wanted part-time without insurance, or these full-time great jobs? Back to you, my friend.
So I know that we have lags in there. We tend to see the interest rates have gone up very, very sharply, and now we're going to lag maybe a little bit for the next couple of months until we see what kind of damage or what kind of good that these rates have done to us. Tommy, stay with us. We're going to go away for just a second, come back and talk a little livestock with Tommy Grisafi. Stay with us. Welcome back to Market Day Report. Let's take a look at our livestock and get back with Tommy here on our cattle market. We are up 85 now on the December contract. 184.47, still kind of up towards the high end of the day. Feb up a buck, 186.17, and April up a buck, 188.55. Feeder market had really been showing some gains and still are up $3 plus across the board. November up 337, 241.95. Jan up 335 at 241.37. Out to March up 335, 243.67. In our hog market this morning, we've been a little bit firmer as well. D's up 287, 73.02. Feb up 270, 76.15, and out to April up 222 at 81.32. I'd like to invite my guest back in, Tommy Grisafi. And Tommy, we've seen the cattle market break pretty hard in the futures and a little bit in the cash market for the feeder cattle index. Does this open up some opportunities for our producers?
I think producers will be excited that we're back at these levels. As you know, we have that gap to fill in live cattle. The futures markets can very much differ from the cash market, and we're very glad that they'll get another opportunity. I guess the big question would be when we're experiencing this volatility in the hogs, of course, today, is the top end in the cattle, or should people be hedgers at these levels? As you know, all people ever want is what they could have had a day ago, a week ago, a month ago. I'm not quite sure we'll get back to those levels, but I've talked to several cattle clients today, and they are absolutely relieved and kind of disappointed in themselves that they were, took off hedges too early or weren't hedged enough. The big question is, as we go up, or if we continue to go up, big question, will people become hedgers again, or overall, are people just scared to hedge their cattle and just going to market them through the cash markets?
That'll be really interesting to see, because I know that we've seen some convergence of basis in the feeder cattle market, and that gives both sides some opportunity. Clearly, to the cattle feeder, he can now come in and hedge those feeder cattle prices at a considerably lower premium than what they were at before there. So I think all in all, that's a pretty good thing. Tommy, I certainly do appreciate you taking the time to be with us this morning.
Chris.
Tommy Grisafi, and he is with Advanced Trading. So, Suzanne, it's music time, I think.
Well, coming up in the next half hour, it's going to be music time for sure. I know you're a music guy. This is a guy.
I always like this part.
You can do it all, too, Chris. You're putting us all to shame, by the way.
No.
And interesting to note, of course, about these numbers coming out in tomorrow's report.
Oh, I can't wait.
Everybody's going to be watching this.
The Fed's really going to be watching, and that'll kind of help us look at what the bond market. We put on 4 big points in the last 2 days. Now, does that stay and add to it, or do we kind of pull it back just a little bit?
Your prediction?
I think that it will come out pretty neutral, and we'll see higher prices in the bond market, so lower rates.
Thank you, Chris.